everyone for attending. We're going to spend about 45 minutes having a really exciting conversation. I couldn't be more excited given the panel that we've managed to get here. I've been to several conferences, including the CBA for about 5 years running now. I don't think I've ever seen such a kind of diverse panel with such a diverse amount of experience. So I think we're in quite a treat as we dig into some of the real big themes that are happening in the finance industry today, especially with the eye on obviously fintech and technology and how disruptive that's going to be. So I'll start with a quick introduction and then we'll dig in. So firstly, Naresh. So Naresh heads up Innovation and Solutions Group at the Royal Bank of Scotland, located pretty much just down the street. And he's had many accomplishments. For those of you who've gone on the website, you'll see that he has won Digital Bank of the Year award twice at different banks. And also at the latest bank, he introduced Cora, which is an artificial intelligence chatbot to the Royal Bank of Scotland and driven a ton of value through that. Secondly, Patrick, who works for a company called Onfido, one of the initial participants in that company, and then moved out here and set up the business in the US, and really has been the driver in introducing that technology into the fintech space, working with a lot of banks, helping them create a lot of disruption in what they focus on. And we'll dig into some of those details, so I won't spoil the surprise if you haven't looked up on Fido. Thirdly, Pia, who has 20 plus years of legal experience, and she recently relocated from Chicago and moved here to join a company called Lenda. And Lenda, the reason she joined there is really the mission around bringing financial services to often one of the underserved community. And with that, she brings a lot of experience and knowledge around regulation and a lot of the other legal factors that are obviously incredibly important as that part of the sector, the market is served. And finally, Miles, I'm very honoured to have Miles join us this evening. I'm the CEO of the City UK, which is an industry-leading membership body, really dedicated to bringing innovation and ongoing growth in the financial sector, focused both in the UK but also internationally, looking for opportunities, especially around technology and what that could mean to the industry. So thank you, panelists, for joining us. So to kick off, we'll start quite high level, just to see what kind of themes emerge. And for probably the only time this evening, we'll kind of go down and just get everyone's kind of high-level take on some of the most interesting themes that have come out recently in the fintech space. So Naresh, I'll start with you.
Thank you. So I would, thanks Mark, and thanks for the intro, it was very good. I think there are probably three main themes that I would probably categorize most of what we've seen in fintech. I think one is what I call point solutions. So these are solutions to make an existing process potentially better, and the intent is to sell it to banks. So things like direct tech or onboarding solutions, KYC, things of that nature. Or the second would be taking existing banking offering and just improving it, making it cheaper, faster, better. Right? So these are things like a lot of neobanks or a current account, and I'll make it better than existing experience. Payments, mortgages, taking existing products, making them better. And the third one, which actually has me most excited, is some of the adjacencies that you're sort of seeing in the market. So you're seeing things like advice, like insurance, you're seeing crypto, for example, a lot of these adjacencies that banks don't offer today, but as a package is very compelling for consumers.
Awesome, thank you,
yeah. Can you hear me okay? Yeah. So, as you'll learn a bit later, Onfido works in artificial intelligence and biometrics. So, of course, those are two big themes in the financial services that are emerging. Something I think is really interesting, and particularly relevant for the consumer, is I would say particularly in the last few years, banks are really thinking how can they reinvent themselves as tech companies. And really what I mean by that is many banks out there, if you go to open a checking account, will have the concept of Patrick as the owner of a checking account. And then I will go and open a credit card, or I'll open a business account, and there'll be Patrick number 2 or Patrick number 3. And the question is, how can we reconcile all those Patricks as the one and only Patrick that is Patrick, not that evil Patrick that's trying to be Patrick? And so how do I do that so that I know who this person is, what are the best products for them, and basically deliver a better level of service to them? And that's pretty much what I think that the tech industry has challenged the banks with, is what the banks are working with right now.
Awesome, thanks Patrick. Yeah.
So I agree with the two panelists before about what fintech can bring to the consumer. And from my perspective in the company for which I work, the real issue has to be with serving the underserved. So later in the conversation, we'll talk about regulation and what that means for our constituency. But what fintech can do is figure out a way outside of the regular banking structure to provide services to the working poor, to the people who only can use cashier's checks, money orders, payday loans in order to run their financial lives because they don't have access to any of the traditional banking sectors. And so what we're trying to do with fintech is to open it to that population that right now doesn't have any access.
Awesome, and Mars.
I mean, I very much agree with the points that have been made. So I think that point about financial inclusion and financial capability is really important. I think sometimes it doesn't get the attention that it deserves. I just sort of comment on two other sort of macro trends. The first is, I think what's interesting is that we're seeing much more, particularly in the UK it is, much more a sense of partnership working. So fintech firms and insurtech firms, whoever it may be, being much more interested in partnering with existing established players, looking at how they can build on each other's areas of expertise. I think there have been quite a few companies down the years who have become burnt by going out and making acquisitions, and subsequently either because the culture didn't fit or because actually the technology often didn't fit, and now looking at that in a much more careful and moderated way. I think the other thing I think is a really interesting trend is like almost a geopolitical trend or geoeconomic. So if you look at where the growth at the moment is, it's not predominantly in the United States. So the United States, fintech in the US is growing at a steady pace. It's doing well, but the exponential growth is actually outside the US. So you look at China, I have to say, you look at the UK, which is growing faster and has grown faster in the US for the last 5 years. But actually what's interesting is what that's therefore leading to. So in China, it's a scale game. And so it's much more about being able to offer the fact that you can get to 1 billion consumers, and they're doing that extremely well. But the Chinese will be amongst the first to admit that what they're really interested in is IP. They're interested in ideas, and they're interested in learning about what happens elsewhere and how you can then scale that up in China, and what is ultimately still a very domestically focused industry. And you're seeing that in a number of other areas as well. And I think how that then plays through over the next 10 years or so is going to be really interesting.
Awesome, thank you. And so obviously, almost by definition, technology is like the real theme that underpins all of this new capabilities, these new offerings that you can bring to the market. Just before I do ask another question, we're just going to tee up a quick video just to give a quick flavour of some of the technology that RBS has brought to the market recently.
Customers today demand efficiency and immediacy. For more than 290 years, RBS has had a fabulous tradition of serving our customers brilliantly, and we're absolutely determined to uphold that. Cora transforms the service we give to our customers. It makes it effortless.
The RBS commitment is clear. It wants to be the #1 for customer services, and part of that journey is going to be met by the introduction of digital services.
We wanted to make it easy to get help without customers having to pick up the phone or look for answers in too many places.
Cora takes the routine stuff off our plates and helps us be brilliant in the moments that matter most to our customers.
The great thing about a virtual agent is you can see all the conversations that she's having with customers.
When developing Cora, we analyze data to determine the most commonly asked questions.
I don't recognize this transaction.
How do I pay my bills online?
I want to change my address.
Cora's trained with over 200 customer intents and has over 1,000 responses to those intents. For simple questions, I'd like to check my balance. Cora responds with the answer straight away.
For more challenging questions, we offer guidance to the customer so that they can help themselves. And for really complicated questions,
How do I make my first mortgage payment? Cora seamlessly hands off the customer to an agent. When customers get to me, I have their information already.
The customers help Cora by interacting with it. That allows us to understand where there are problems and where we can enhance the performance.
So we've had to teach Cora how customers ask questions. Customers don't talk in bank speak. So they'd say things such as, I'm moving house, not I need a mortgage.
I got my new card. What's next?
Can you set up a card for me?
How do I pay someone new?
We've been able to double Cora's knowledge base with feedback from customers, feedback from colleagues, help from IBM, and of course that takes great teamwork, is what's made the proposition even stronger. We've increased her knowledge base by 100%, and that's wonderful progress in 12 months.
To customers is really the icing on the cake. I think our AI journey has been fantastic and is going to allow us to create new products and new benefits for our customers for years to come.
Awesome. So, Naresh, I mean, obviously that's a very innovative technology that's been brought into the Royal Bank of Scotland and a big partnership with IBM. Can you talk a little bit about what that how that came to be and what some of the challenges were?
Absolutely. So this is, I think, something that we actually started on a journey a while back, probably 2015, in terms of actually coming up with this concept of, our initial concept was having the artificial intelligence Watson help our frontline staff, and we actually launched it internally. And our frontline staff was like, this is so good, we should actually expose it directly to customers. There's no point for me to repeat what Watson was telling me. So it was an interesting journey. I think some of the difficulty of even naming, and the type of things, not even technology, is things like, what should the name be? Because it ends up being the name of the bank, the face of the bank. So coming up with the name Cora was difficult. There's a lot of names already taken, actually. So if anyone's interested in creating a digital personality, you better get these names very quickly. I think that the second thing that was quite, we did a lot of study with customers on this, right? So initially we spent a lot of focus on personality. So if someone said, I lost my card, you would say, oh, so sorry to hear that. Don't worry, it can happen to anyone. What kind of card was it? Right? And someone said the blue card, which actually doesn't help us too much. Right? But what we found from working with customers is that they know they're talking to a machine. You don't actually need to pretend to be human. Just get to the point. So that now we should say I lost my card. We're like, what kind of card is it? One for credit, two for debit. Get to the point. So a lot of going back and forth. It was a really exciting journey, and we just started this. We're now launching Cora on Alexa, on Google Home. We have a real live-looking digital human called Cora, so we're doing it now with Facebook.
Awesome, very exciting. And I was actually at the CBA conference last year, and there was this running joke that AI stood for almost implemented, and very little had truly come to fruition. But Patrick, obviously you just said, I mean, Onfida is really fundamentally based on a lot of this technology. Can you talk us through a little bit about your perspective of AI and machine learning and how important that is in the fintech space?
Sure, and kind of in response to the almost implemented, I would say that there are so many applications of AI in everyday life, from Spotify recommending what music to listen to Cora interacting with users. Our experience, I would say, in the realm of regulation, and for those of you who don't know, we help banks or fintech companies collect a government ID, and on the back end, we're telling the bank whether that ID is a genuine document. That requires a lot of artificial intelligence or offices full of people making those decisions. And that's where the AI history that I've seen has been the idea that AI equals people get removed and the machine does everything. And the reality is that's not how AI works. The best applications that I'm seeing right now are applications where very manual tasks, often fraud tasks, operational tasks, compliance tasks, that traditionally have been left entirely to humans, are reaching a scale that are too expensive just to be handled by humans. And so the question is, how can we bring technologies in to help people focus where they should and let everything else be handled automatically? So I would say that's where AI is gaining most traction right now, particularly in financial services.
Awesome, and yeah, we'll play a very short video just to bring some of the on-FIDO technology to life. I think it's pretty cool to see how it can remove such a significant blocker in the value chain and communication.
Her Facebook feed, and she comes across that ad that I just mentioned. Timely. She says, "This is awesome." Flipping through her Facebook feed, and she comes across that ad that I just mentioned. Timely. She says, "This is awesome. I was looking for a personal loan anyway, so let me tap into this." She sees some T's and C's. How much? How long? But before she can proceed, we need to identify if Rachel is indeed Rachel. And this, frankly, is what makes our platform. The integrations with our great partners like the Onfidos of the world. Onfido can start to digitally identify Rachel by taking a picture of her license, front and back. And we all know that millennials love selfies, right? They have sticks for crying out loud. But this is more than that. This is liveness, facial dimensions, verbalization.
487.
You couple this with Onfido's OCR technology and their deep machine learning. You bounce this against their back-end database and bingo. Just like that, we've digitally identified Rachel. Oh, and as a bonus, we took the attributes from that onboarding and we put it in the app so she wouldn't have to repeat this information. She is blown away. Cumulus Bank is the real deal. They are legit. Flip.
Awesome.
Okay, I have a question about that. There were some parts of that that I thought might be a little alarming. Have you found that with the pictures of the face, turn left, the voice recognition?
Alarming in what way?
Well, I guess it's part of it, right? Is that consumers are so excited to have so much access and help with things digitally, but then at the very same time, there's such huge privacy concerns. And they are diametrically opposed quite a bit of the time. So I'm wondering, do you have any, I guess, negative feedback is too strong a word, but people who are paranoid by that?
So that's a very good question. I think we will work our way towards that a little bit later. Another example of that was, I was talking to someone a little bit earlier, they were talking about trying to book an experience through Airbnb, and they will ask for a document check. They'll ask for their document. I'm like, sorry, I don't want to do this. What happens to my data? Is it ever going to delete it right away? There's a balance, right? So there's a balance between keeping your platform secure and giving the user the frictionless experience that they deserve. And I would argue that there are many cases where this isn't really about collecting an ID, it's about how you go about collecting an ID and how you go about collecting itself. Side note, as a millennial, I actually hate selfies. I might be the only one. Yes, ironic for this panel. But yeah, like to the answer at like very high level, what Onfido has 4 panels and 4 pillars that build the company, and the fourth one of those pillars is privacy. So we as a business really care about how the data is handled. Our head office in London, GDPR is our day-to-day. So yeah, it's a concern. From my perspective, it's more of a user experience than it is a challenge around privacy as such.
Just to add to that, I think those are good points. I mean, you mentioned, Patrick, that some people are concerned with providing these documents to the Airbnb, for example. But what we've seen, at least with our customers, when we went through the onboarding journey, they tend to trust the banks. So if the bank offers this capability, they're comfortable. I trust you with my money. I can trust you with a picture of me as well. So we haven't had the issue in terms of concerns from our standpoint.
That's a really important point as well, because actually what the polling data bears out here is that established institutions like RBS or HSBC or Chase Manhattan or whatever actually have much greater levels of trust from customers, which actually I found slightly surprising, particularly amongst millennials. So there's this sense that here is an established institution. Take Barclays, it's 300 years old. It was an established institution. I trust that. It's been there for a long time. And you can see that, therefore, there is the possibility of greater partnership between, almost in terms of borrowing the credibility or the trust that an established institution has.
I guess just play devil's advocate, I agree with all of this. There are some great examples, though, of fintech companies that have managed, just looking at Britain, Monzo, Revolut, some really, really, really young companies that have achieved incredible scale very quickly. And that's achieved through how you interact with the user, right? And that's, again, why it's about so many things, but at the heart of it, it really is about how, as a young company, that's the interesting role that Fido plays is how we build trust in the user, and the services that we provide to a bank are very different to the service we might provide to a tech company, where like collecting an ID is harder, right? And how do you build that experience that instills trust in your user, and how do you build that brand?
And Pio, I mean, obviously, LendUp was founded in 2012, and has a fairly interesting business model. I mean, I'll let you explain to the audience, just in case you haven't heard of LendUp. But how did you manage to build trust, and what role did regulation play in that, given you've really been around for 6 years and grown rapidly?
Sure. So LendUp, for those of you who don't know, is a disruptor in the payday loan space. That's the best shorthand for it. So it's a way to provide very small dollar loans, and I always describe our constituency as the working poor. These are the people who, if something happens to their car, getting $400 is not something they can go to their bank account for. They need a small dollar loan because if they don't get that $400 to repair their car, they'll lose their job, and that will cause a cascade effect. And so there are a few things that LendUp has done unique. Now, I have to say, we do not use AI. We are not at that level of scale that may be in the future for us. But what we have is something called the LendUp ladder. So as one takes out these single payment loans and pays them off, then you have the opportunity for a larger dollar loan in the future at a lower rate. And the big part of this as well is that, is that we're giving access also on a mobile platform. So we understand that our customers are not sitting at a computer for the most part. They are on their phones. They may be Uber drivers. They may be hourly workers at a variety of places. And one of the other interesting aspects about our product is there are no debt tracks. And what that means is, at a traditional payday lender, so you borrow $200 and you need to pay it off in 30 days, but you don't have that $200. Well, guess what they'll do? They will give you another $200 loan in order to pay off the first loan, but not quite. So you'll have the interest from the first loan, and then you'll have the second loan, and honestly, for some people, this ends up being 5 loans. So for their initial $200, $400 loan that they needed, some of these people are paying $3,500 because they needed to roll over. So one of the things that LendUp does is until you've paid that first loan, there are no more loans. So you cannot roll over your debt into a new loan. So this is one of the things that we're trying to do in order to come up with different alternatives for people. And with respect to regulation, and I'm going to try to make this really quick, with respect to regulation, one of our issues is that we are viewed very suspect by the regulators. And the reason we're viewed very suspect is, who are we getting in the way of? Well, we're getting in the way of payday lenders and traditional banks. Even though I do have to say, most of our customers can't get the time of day from a traditional bank. They have to pay for their savings accounts. They have to pay for their checking accounts. Like these are not like what you and I have access to. And so that's one of our ongoing things, being in fintech, being something new since 2012, and there are other people in our space, without a doubt. But all of us are having to educate the regulator to try to bring them along in that we are trying to provide a service that is otherwise not available. And I will make my last sort of very, I guess, personal, judgy statement, which is that I find the regulators spend a lot of time infantilizing the constituency that we serve. And the regulators take the position that the poor cannot figure out if they need $400. That it is for the regulators to decide whether they can pay back that $400. There's a full variety of things that finally later I'll talk about it ad nauseum. But that's also one of the things with which we are struggling, because the regulators very much want to get in the place of people where you and I, we can spend $400 on whatever we'd like to spend. And so there's that additional judgment that for some reason, the poor do not have an ability to make the same decisions you and I would make. And personally, and I feel a little free to speak on behalf of LendUp, and there are a couple of LendUppers here, so just scream out if I'm getting off track, but I find that really offensive. I don't think people are poor because they are lacking or they are less than, and they should be able to make their own decisions. And to sum up, LendUp is there in order to provide that avenue for them.
Yeah, and on the other side, I mean, I think as banks try and introduce innovation, regulation can all sometimes, although the intentions may be good, slow down innovation, make innovation far more complex to actually enable. But what role does that have as fintech companies and banks try and evolve and try and really take advantage of technology?
I think it's got a significant I think there's a significant element there. I mean, clearly we've got an increasingly sophisticated ecosystem, increasingly sophisticated firms, increasingly, in many ways, increasingly sophisticated consumers, but totally take the point. There are other consumers for whom the system isn't designed. And so RegTech is part of a sort of complex element of a variety of technological dimensions to this. I think in terms of is that better? Thank you. So I think there's a significant role for this, but I'd just like to come back for a second on the point about regulation and sort of thinking behind regulation. Regulation starts from the point, certainly in terms of the situation in the UK, of wanting to protect the consumer. I think sometimes it can be overprotective, and we've seen that, but it makes a number of assumptions about the consumer. So one of the things that always amazes me is the T's and C's that you get on any significant financial product, which are now probably running into the length of Hamlet or something. The idea that the average consumer is reading those is just ridiculous.
Well, and I do want to jump in with that. Is I, over the years, have been in more than one meeting with federal regulators, state regulators, and law enforcement at both levels that have told me flat out that the consumer will never read anything that we have put together, but they still hate that we didn't have a comma here. And so it is not that you're dealing with regulators who actually believe that anyone's reading it. They absolutely will say, no one looks at this.
Yeah, I think we know that. We looked at, we did studies on this where in the past you used to have a banker that would actually explain the product to you, and this is what this means, right? You don't understand it, but this is what it means. We'll explain it. Now as things move to digital, everything's online. No one really reads the terms and conditions. It's just not banking products, it's I think things in general.
Well,
but it's box ticking exercise. People say we now have informed consumers because they've got a 20-page booklet or a 20-page PDF.
And we all know that when we have our iOS update and it asks us to agree, it could be the entire text of Mein Kampf, and we're all like, agree, right? We've all agreed to it, whatever was in there.
But one thing we've done now is we actually translate a lot of legalese to common English, and we've done very different experiments with customers. We translate a lot of legalese. You need the legalese for this applicable in court, and that's what the legal foundation requires, but we converted that to common English, and then we sort of highlighted the salient points for people to understand on contracts. And we went all the way to the point of even giving a quiz, simple quiz, true or false. Are your payments the same each month? True or false, right? And sometimes it's false because they're variable. But we at least we went through that effort, and what a lot of people in the product team have been like that, we share sales. And then we played around with different models, but we actually got it to the point, and the regulators really actually liked it, that we were taking a step forward to help explain what the products mean.
And I think that's really important, because actually it's really easy to blame the regulator.
Yeah.
It's a sort of fallback position. The regulator made us do it. It's like some big boys did it and ran away. It's actually much more incumbent on industry to step up and make these products easier and more accessible. I'm always sort of struck by when I get my iPhone. It comes with no instructions whatsoever, but it's intuitive. You know how it works. Whereas, 25 years, I'm going to show my age now, 25 years ago when you got your VCR and it came with a 50-page booklet, then all that meant was that nobody knew how to use their VCR. It wasn't an intuitive product, and I think there's much more that we can learn as an industry, as a financial services industry, from companies that do reach out to their customers, design these things that are more intuitive. But also, I think there's something that we all need to do as a society, which goes exactly to the point that you were raising about making sure that we are arming consumers, because ultimately regulation is based on asymmetries of information. And if you have an asymmetrical situation where the consumer knows very little, but the provider knows a great deal, regulators will immediately step in. And there's something we need to do in schools, and there's something that we need to do in society just to make sure that consumers are better able to understand these products. I'm always reminded of a statistic that the Financial Services Authority put out just before it was shut down in the UK, that 25% of consumers didn't know what 25% was. And that's the sort of level that we need to deal with.
And I have to say, it's counterintuitive, but I sometimes wonder what demographic that 25% is. Because if you actually look at the poor budget better than anyone in this room. I guarantee it, because every penny makes a difference. It's whether there's going to be food on the table or rent. And so it's one of these things that there's some type of assumption that as you go down the economic ladder, so does intelligence and sophistication. And it doesn't. And the reason it doesn't is that people at the top of the ladder, difference does it make, right? Oh, this month was 1,000 off of that month.
Yeah, the evidence is actually,
right?
It's what in the UK you'd call the sort of lower middle class, who are the worst at switching. They don't switch accounts, they don't switch energy suppliers, because for them, a few dollars or a few pounds, doesn't really make the difference. The people are much better at switching.
Other people don't have to use microphones. Exactly the people we're talking about.
Right.
And I think you look at that space, and one thing we have done is we kind of went away from rates. We do include APR rates and stuff because that's you need to. But we also said, this is how much you pay per month, right? Let's make it really clear. You're going to pay £200 a month for the next 12 months, right, for this installment loan. And let's make it really clear that this is how much you need to plan for. I think a lot of it is just language.
But just one point on the regulator, I think there's also a point of not all regulators are made equal. To provide the value of the FCA particularly, they are a regulator that is very open to dialogue, and that also means that businesses feel much more comfortable taking risks effectively and bringing in some form of innovation. They're actually allowed to bring in some form of innovation, like the sandbox that is currently in companies in funding. Not every country has that, and particularly as a RegTech company, I think what a lot of technology companies can bring to the table is trying to bridge that gap between what a regulator is trying to achieve and a tech company is trying to achieve, when that dialogue isn't really easy between them directly. The ideal world for a RegTech company is for a regulator to bring in a framework, you write some code, you provide an API to a company, and by plugging in that API, that company is compliant. What a beautiful world that would be. We're not quite there yet.
Awesome. Thanks, everyone. I knew regulation would definitely be a hot topic. So shifting gears a little bit towards competition. I think, Miles, you mentioned at the beginning that we've already seen a pattern in terms of banks are starting to really embrace some of the financial technology companies and see them as partners. But given, I know Amazon recently announced that they were launching a bank, and some people are kind of terrified on the traditional banking side as to what that may mean. Some people dismiss it as quite farcical, that Amazon think that they can disrupt an industry such as banking so quickly. Very interested, I'll start with you, Miles, in your perspective on that.
I mean, that's a move that people have been waiting for absolutely years. When was Amazon, when was Google, when was Facebook going to step into the financial services space? I think there's the financial services space and there's the financial services space, right? I mean, I am not expecting, unless I am seriously misreading the market, that Amazon is about to go in a big way into wholesale markets. It just doesn't make any sense. If you're Amazon, you are in a space where you don't have to deal with the financial services regulators on a day-to-day basis, and that's a competitive advantage. But actually, if you can offer, and I would have thought this makes complete sense from the Amazon offering, if you can offer to your customers a seamless end-to-end service where you can offer a degree of light lending, or you can offer a certain amount off your purchases with Amazon if you have an Amazon account. There's a variety of things that you can do that do make sense. And this is nothing new. It's been happening in China for a number of years now. So actually, Amazon are quite late to the party in the grand scheme of things. But it's that element of, again, as I was talking about earlier, what we're going to see is a much more sophisticated, much deeper ecosystem over time. It will have new players in there, it will have unexpected players in there. Deloitte did a report a few years ago.
That's like the music playing at the Oscars.
It is, that's the time to be quiet. But you don't need banks to do banking. And banks will always be a part of that ecosystem, but they will operate in a slightly different way, and there'll be new players in there. So I think personally, I think competition is a good thing, but we just need to be slightly careful that people don't go sort of diving into financial services, expecting that there are easy profits to be made. I think if it's additive, that's all to do good.
Well, and I have to say, I do welcome our Amazon overlords, personally. I'm good with it. I'm at peace. But I think there are also other parts of it. There's being a disruptor, and then there's also traditional financial services that have made their decision about where the money's to be made. And the money's to be made with the rich. And so they have pulled out. HSBC years ago pulled out of the United States in any significant way. And so I think that it's also this self-selecting thing which gives the fintechs an opportunity to get into these spaces. And is Amazon coming after traditional financial services, or is their first target PayPal?
I think it's a really good question. I mean, I used to work at HSBC. I mean, there were good reasons.
So you know the truth.
So
I am not speaking out of school.
Maybe over a drink later. There are reasons why it's difficult to break into the retail market in the United States, extremely difficult to break into the retail market in the United States.
And buying household finance didn't help. But
I arrived at HSBC after that decision was made. But I think it's absolutely right that there are a variety. There's a benefit to the consumer for additional players coming into this space. I think what Amazon is doing makes sense if you are offering increasingly a full service offering to your customer base. I fully expect others will move into that space over time. And as you say, that's not necessarily a bad thing. That's a good thing if it leads to greater innovation, greater positive customer outcomes.
Yeah, and in fact, we're actually working with companies like Amazon, where if you're an Amazon reseller and you need cash or cash flow,
I'm sorry, what is that?
Amazon
reseller?
Yeah, let's say I'm a business
reseller.
Reseller.
Okay,
Yeah.
I got it.
I'm a reseller on Amazon, right on the marketplace or whatnot. I would need, I potentially need to, need money in order to manage my cash flow. So Amazon is helping us with data, right? So they have tons of data on customers on Amazon, so we could actually have a much richer credit model than we can just looking at FICO scores.
Awesome, and so just before we open up some questions from the audience, I just want to play one last video. Just to, this is actually a video that NextGen pulled together. I think it paints a pretty exciting picture of what the future may look like, and then we'll finish with to hear the panel's thoughts before opening up for more questions.
Experience in 2020. While Lisa is sleeping, her phone receives a notification regarding the shipment, which is ready with the exporter. The intelligent software checks for funds and notifies her bank that she would need a letter of credit. Understanding an urgent change in schedule, her phone automatically resets the alarm for 7 a.m. so that she can plan her day. By the time Lisa is ready to go, her smartwatch receives a notification that her black vehicle is low on fuel and suggests that she drives the red car. The GPS selects the shortest route, and Lisa arrives in the New Age Bank's intelligent branch sharp at 9. From the moment Lisa arrives at the bank's special branch with no staff at all, the door installed with intelligent communicators scans Lisa to notify the bank about her arrival. Bank's interactive walls talk to Lisa to tell her about how she can transact better with bank's offers or corporate credit. Meanwhile, her smartwatch directs her to a special kiosk where the bank welcomes Lisa, automatically logs her in, and connects her to an expert, who is a client of the bank too, to guide her about the needs for the letter of credit. Within minutes, her letter of credit is approved, the exporter receives the payment, Lisa's shipment is released, and the time is just 9:15 a.m. Rewinding to today, can you imagine the intelligent banking experience on a vacation? While Ted is enjoying his vacation, a bike, Harley, passes by, catching his attention. The bike has been Ted's dream since school. Ted takes the picture and uploads it on his social media account. Instantly, bank's intelligent software picks up Ted's interest in his bike, analyzes his post on social media, his sentiment, his conversations about the product, and after analyzing his spending pattern, the bank offers a pre-approved bike loan along with information on the best dealers around, their discounts offered, and the color options available all on the go. While Ted is still on vacation, the bank's geotagging technology identifies Ted's location, instantly analyzes his credit card spending pattern, and offers him the best deals on bike accessories at a nearby store. And this is not all. Before the vacation ends, the bank delights Ted by offering him free airline miles and complimentary hotel stay to plan his next vacation. Imagine millions of customers like Ted for a bank like yours. The intelligent software enables you to continuously track millions of social media conversations to engage, interact, and offer a futuristic banking experience to your valuable customers. Place, time, or medium no longer matters. Engage your customers. Delight your customers. New Gen products.
So is this 2020 or is this 2025, 2030, or do you see the experience evolving slightly differently? Naresh?
No, I think it's not too far away. I would say probably 2022-ish kind of thing like that. And in some parts of the world, you already have similar experiences. You don't even need to go into a branch to have
I think this might sound a little bit self-serving, but I think this world can't really exist until we really crack the identity problem. I won't give into our monologue about it, but we haven't quite. And we need to be sure that this is the same person throughout all of these devices, throughout all of these experiences. little bit more pessimistic in 2022, but you know, if not, we're not quite there yet. We're getting there.
I'm not sure. I am convinced that conversations that I have at home with family show up in ads on my Google search results. So I'm like, I swear I didn't search for that, and there it is on the side. And I will absolutely admit I'm a straight shooter. That as much as I said earlier that was creepy, it's also very handy. And I'm like, oh goodness, look at that. I was just talking about that. So I don't think I'm the only consumer that's conflicted in that regard. Like, I think if we're honest with ourselves, we have concerns about privacy. And as I was watching that, I was a little creeped out. And at the same time, I thought that might be kind of awesome. So I think it is one of those things that I'm not exactly sure how soon it is. But I do believe if we're all being honest, everyone will get with the program, and provided we have services like yours, and people are feeling secure that it truly is them, the ease of that is going to trump any concern.
I don't know about 2020, so I think that there's a variety of issues here. I mean, one is just data. And we talked about GDPR already, but there is a question mark about how much data people are comfortable giving away. I think also if you talk to some of the sort of cutting-edge thinkers, cutting-edge companies in this space, bizarrely we are running out of data. So the data sets that currently exist that are easily accessible by corporates have largely been mined. And the stuff that we're now running into, the data that we can't get hold of, is the stuff that's held by security agencies, governments, that they're not willing to hand out. So there is a limit to how much data, how much more data there is, how much more data people are willing to share about themselves, and also the capacity of AI to mine some of this stuff. Because sometimes humans are irrational actors, and you can have as many algorithms and pattern analyses programs as you want.
There we go.
People are just going to be irrational about their particular purchases. I think one thing that's interesting, I was talking to a large search engine, guess who, and they've been looking for a little while about one of the ways that you get around the data and the data crunching problem. And one idea they had, and who knows whether or not this will happen, is actually charging. So they charge the consumer a small nominal fee on a monthly basis. You provide greater data, and you run through a test or whatever, which gives them a better sense, or their algorithms better sense of the kind of individual that you are. And that allows for a much more targeted experience. And I think that's going to be interesting. The extent to which you make it almost optional. Potentially, it's not something that they said they were going to do, it's an option.
The trade-off for payment by a consumer is a unique user experience. That's what they're proposing now.
It's totally personalized experience with more data than you would pick up from just using the search engine or your Amazon experience or whatever it is. So you sort of fill in a personality test to allow greater accessibility to your data, and that allows for a much more personalized experience. And that then runs into a whole number of issues, because you've essentially divided the population in two at that point. Those who are willing to pay a nominal amount, but will obviously allow up, give away more of their privacy, trust the institution with that privacy, but are therefore allowed a greater accessibility to options, products, services, whatever it may be.
Isn't it just me, but doesn't that sound a little backwards?
Yeah, I was thinking
that I would think if I would be paid in order to give away, like it's a little bit of a counter.
You pay to get less of your data provided.
No, right, it's counter.
It's slightly counterintuitive, and as I say, this is one of the options they were looking at. And I made exactly the same point to that individual, and they said it's like paying for a premium banking account.
Do any of us do that?
People do pay for premium.
Awesome. So I think we've got a little bit of time for at least a couple of questions. Any questions from the audience?
stuck on the paying to give your data, or paying for someone else to have your data.
It's paying for so the way it was presented to me was it's paying for a premium service. So you get more. You give more data, but because you give them more data, you get access to a greater suite of services, a more personalised experience. And this is not paying $100 a month.
Yeah.
This would be a sort of relatively nominal amount, but which would add up over time.
But if you're paying for that data, like whatever amount you pay, it doesn't matter whatever it is. If you decide you don't want to use that service anymore, they still have your data, so they give it back.
Yeah.
Like,
I have my data back.
Yeah.
And I mean that ties into everything from like marketing to advertising to enterprise discoverability. Sure, I want to have a more personalized experience. Let me pay you $2 a month for a personalized experience, but then are the enterprises then in turn also paying to tap into this market of basically pre-vetted consumers, and it seems a little backwards.
I don't want to give the impression that I'm here proposing it or defending it. I'm just explaining what was said to me, and I agree. It seems on the face of it slightly counterintuitive.
Yeah.
But in the same way that if you are paying for a private banking experience, you are paying for more access to funds that aren't available to other customers or whatever it may be. And bluntly, it wouldn't surprise me if that is where we might end up over the longer term. That you sort of have an experience which is, for the vast majority of people, you have a bog standard, search engine experience or Google experience or Amazon experience or whatever it is, and you basically sell to others a more premium.
It's almost like paying for a first class on the flight, right? You can get there at the same time. You're just paying more for the experience. Some people might do it.
Awesome. Thanks everyone for a great panel discussion. I'm going to start with a joke. It's not a very funny joke, but some of you might get it. It's that during funding, it's called AI. During recruiting, it's called machine learning. And during implementation, it's called logistic regression. So a lot of what was discussed today and referred to as AI is a bunch of existing technologies that have been around for a while. So it's NLP plus a decision tree, it's a classification model. These things have been around, and while they're very exciting, we understand what they are and we understand how they work, and they mimic largely a lot of statistical techniques that have been around for a while. So I am currently work for one of those fintech partners that partners with banks, and our software leverages predictive analytics. And so I've personally been through, with some of the larger banks in the United States, the model risk governance reviews for something as simple as a logistic regression, and they're a bear. They take a really long time. They have PhDs that spend months grilling your data sets, grilling your statistical assumptions. So just getting that technique that's been around for decades passed by a lot of these large financial institutions takes a really long time, and it's not easy, and model interpretability is really important for these institutions. So my question to the panel, for those of you who can speak to it, is I get that there are really advanced machine learning techniques out there that can do logistic regression classification better than logistic regression can. I get that there's really advanced NLP tools out there that can help parse consumer demands and push them towards a particular product. However, how do we work with, or how do you view, what's the best strategy for a fintech partner to get the regulators comfortable with really advanced, novel statistical and algorithmic techniques that they might not fully understand and that we may not be able to fully articulate, given that they're kind of black box techniques in terms of driving banks forward along this analytical journey that we're trying to take them on?
We went through that journey to some extent, so we have people that deal with this stuff. I don't know what it means half the time in London, and the challenge that we've had is one, how to explain to businesses why it's worth paying to not have a team of people do it and ask a machine to do it, just a machine to spurt out a response. And how does that machine work? What the one person can do? Why is it sometimes wrong? How does it work? There's lots of complication, like just to explain it to the market. Then going to a regulator it's even harder to play effectively. So we have experience mainly with the FCA and with the regulators of the DC, OCC, US Treasury, there's a whole bunch of them. Our experience has been it's not really about the technology at all, it's about the business impact or the objective, right? So we have two main things. We're taking personal data from people, so how do we guarantee that that data is safe? And we are helping businesses reach certain compliance standards. So how do we do that? And to be honest, like it's 2-3 years that we've been in the US, it's 2-3 years that we're in DC. And we're a founding member of the Better Identity Coalition, which is a bunch of people that are advocating how identity should be done in DC. It's a very slow process, and it's not got much to do with technology at all. But I think that's the only thing, not about technology.
Yeah. I think a lot of the model frameworks you're talking about are historically set up like credit models and things of that nature. There used to be very static models, right? And now with the compute power we have available, these models are far more dynamic, right? And I think black box models, as you described it, are quite difficult to actually get people's arms around. And I think conceptually, I can understand that black box model may be even far more accurate than this fixed model that we have out here. But I can explain all the decisions here. So, for example, when you saw Quora, we designed Quora to be white box in terms of every response Quora gives to a customer. I can go back and trace why did Quora felt this was the customer's intent, and why did Quora say that. So if things go wrong, we can go back and figure out what was wrong in training or in the models so that we can fix it correctly. And something like AI, and someone just mentioned a point around jobs. We actually hired people full-time to be conversational analysts, and their full-time job is just going through all the conversations, the low-confidence conversations for us, having it, training for us. The model gets better and better over time.
Right. Well, and at the federal and state level, we have record retention requirements.
Yeah.
So a regulator can come and say, if someone applied for your loan in 2016, what screenshot did they see on page 3 of the application? Now, it's not John Q. Public, but on October 3rd, is that where we're at today? On October 3rd, 2016, what did page 3 of the application flow look like? So we're not even at AI. I have to be able to say, this is page 3 screenshot of what someone saw on October 3rd, 2016. And so that's part of it. I think a black box thing, again, I don't know if there are any regulators in here, but it's not necessarily the most sophisticated folks that you're dealing with. And so you really do have to hold their hand and explain. And I'm not exactly sure what I would do if I had to explain black box things to a law enforcement officer.
I'm a former regulator, so I appreciate your pain. That's why I left.
I mean, for me, this is what things like the regulatory, and certainly in the UK experience, this is what things like the regulatory sandbox are for, and this is why, from a supervisory perspective, one of the things we've argued for is actually a closer relationship between the supervisor and startup fintech firms. And if you get that earlier on, it's more of a partnership with the regulator at that point, and you can walk, both sides can walk each other through. So the supervisor can walk through what they are concerned about, and the fintech firm can walk through what they're trying to do. And if you have that dialogue, it essentially sort of the foothills of the official mechanisms, dealing with it down there means that it's much less likely that it escalates to the point where everybody's getting the lawyers involved or whatever it may be. So I think that there is an element of building the dialogue using the sandbox. But the reality is, that will differ from regulator to regulator, will differ in the US from state to state. I don't think there is a one-size-fits-all solution.
Well, the CFPB, to your point, does have a similar type of partner program in the United States. I'm not sure to what degree that has taken off or not, but certainly a great suggestion. So good, thanks.
Just to defend them a little bit, just to fight the regulator, even in the US, they are engaged in the conversation. It's just that it is a very hard conversation to have. But the US regulatory, and also something that's happened is there's a lot of competition around the world around the kind of financial models that are possible. So there's a lot of pressure in the US to actually innovate, and the regulators are asking themselves those questions. It's just really hard. Often they don't have the background to understand it in the language that Silicon Valley speaks, and it's to some extent in Silicon Valley also, to be able to speak in DC language. That bridge is like not often built.
It's probably not helped by the fact that people who know what they're doing and the supervisors go off and work for fintechs.
Well, exactly.
So I think back there, you had a question.
Yeah, I think we've got time for one more, so yeah, thanks. Yeah, thanks, Dave.
Thank you. First of all, thanks to the BABC for hosting this event. I really appreciate it. My name is Irene. I work for InvestNet Yodlee, but tonight I am representing the St. Andrew's Society of San Francisco. So Naresh, congrats on Corey. That is a brilliant app. 5,000 questions is a huge success and a huge amount of data. Could you tell me how you managed to manage your customer satisfaction when you were trying to improve the questioning? Because obviously not every question a consumer asks is answered correctly. So how did you go to market correctly, or to manage all of those? And then as a native Scot, how did you manage to process all the different dialects? Because Amazon Alexa and I have a very special relationship.
That's quite good. I think, and this would be my advice to anyone, you really don't know until you try something out. So we actually, when we initially launched, we launched with about a dozen intents. And as you saw in the video, we're well over 200 intents, very close to 300 now. So the part of AI gets better and better over time. We track something called containment rates in terms of the percentage of conversations that are handled by Watson without human intervention. So in order to manage customer satisfaction, if Watson is not confident, if Watson's not 90% confident with the answer, it'll just refer to a human. Okay, hold on, let me get an expert to help you out. And initially that was single percentages that were containment rates. Now we're around 70%. So 70% of conversations are contained with no human involvement. And it's just getting better and better every day. You measure NPS scores, is what we talk about satisfaction, and it's in the mid-50s, so it's quite positive if you're seeing the channel. What you do see is different customers prefer different channels. So if someone is digital native, they can do everything on their app. They tend not to do the natural language and let me ask Alexa what my balance is, because it's much easier for me to just get it on my phone. We have a customer base that are not comfortable with technology, not comfortable with their app, and they're the ones who tend to use voice or some of these other natural take-up rates to say, well, let me talk to the bank as if I'm actually calling up the bank. Dialects, you sort of have to, the far stronger Glaswegian dialect.
Edinburgh, actually.
Yeah, and with Welsh, and sort of the UK is quite interesting. We have different dialects in different parts of the nation. So voice is very tricky, right? So we've been, as you saw in the chat, is typically text, so it sort of gets rid of the dialect issue. We rely on Alexa and Google's natural language processing, which, as you said, is not very good in some dialects, but it's getting better.
Awesome. I think we're out of time, and the plan, I believe, is that everyone can continue networking until 8:30. I think. Looking for Joe to give a thumbs up. Awesome. So do feel free to come and continue asking the panel some questions at the end. But let's give the panel a big round of applause.